Hello. Okay, this is working perfect. Good afternoon, everyone, and thank you for joining this session on what is, in my opinion, one of the most interesting topics in the world, central bank digital currencies. My name is Hassan, and I'm going to moderate this session today. I think my introduction is already made, but I work within digital assets and financial stability within the Central Bank of Denmark. I'm mainly focused on digital assets, CBDC, crypto, and stablecoins. And I would just say before presenting this great panel, I just want to quickly set the stage. So in the past 8, 9 years, there's been one big question amongst central bankers, and that's been, do we need central bank digital currencies? And within that topic, one particular type of currency has been the most discussed one, and that's been retail CBDC. So that's been a digital format of central bank money accessible for everyday citizens and businesses. However, there's been a change in recent years, and especially this year, and that's been around wholesale CBDC. So that is also central bank money, also in a new digital format, but only accessible by a financial institution. And maybe to highlight the shift in the conversation that we've had is that the BIS, so the Bank for International Settlement, they recently published a survey saying that central bankers or central banks are more likely to issue a wholesale CBDC than a retail CBDC within the next 6 years. So the topic of today is to discuss exactly that. What is happening within the financial sector that is driving some of these questions and needs? What is a wholesale CBDC exactly? And what are the technologies that are being explored to develop one? And then finally, do we actually need one? Or are there other means of addressing the same problems? So I think without further ado, I would like the panelists to introduce themselves because they can do that much better than I can. So Wayne, would you like to start?
Sure. So Wayne Hughes, I'm in charge of blockchain and digital assets for security services at BNP. So very focused on preparing everything so that we'll be ready to provide services to our clients once they're ready to start investing into different types of digital assets.
And I'm Daniela Barbosa. I am the Executive Director of the Linux Foundation Decentralized Trust. This is a new foundation that we launched last week that encompasses all the Hyperledger projects, many of them that are being used in CBDC projects, as well as another foundation, Trust over IP, and some new projects. For those of you who don't know what the Linux Foundation is, just very quickly, it is, for the last 20 years, has been the home for what I would say some of the most important open source projects, obviously the Linux kernel itself, but pretty much every piece of technology you probably touched today uses open source code, and much of that open source code sits under the Linux Foundation. So we're really part of building this new infrastructure with open source technologies, and I'm very glad to be here, and thank you for inviting me.
Hello, my name is Lex Fisun. I'm the CEO of Global Ledger. We provide AML compliance software and consulting. And in terms of CBDC, we participate in proof of concepts and research into like how to launch digital euro, how to address AML risks with growing speed of transactions, with cross-border transactions and things like that. So for the most part, on this case, we work with central banks and with commercial banks that are preparing for the CBDC launch to address the AML risks and risks of terrorist financing.
Perfect. So I think we've had a great, I think we're going to have a great discussion. And I think just to kick it off, one important point of understanding why we need CBDC, or if we need a CBDC, is to understand some of the current developments. And I think Wayne, coming from the private sector and coming from an organization driving some of these developments, could you explain what trends are we seeing, what developments are we seeing within DLT, tokenization of maybe traditional securities, but also new types of securities, and how that feeds into the whole question around central bank digital currencies?
Yeah, sure. So I'd say as you said, when we talk about more traditional types of assets and processes, the main focus that we're still seeing out in the market is around digital bonds, tokenization of funds for distribution purposes, and also, of course, cash. No, and I think what we can say there is, we're seeing some positive trends. I think we all know things have started very, very slowly, so we've had to really learn patience. But we are starting to see more frequent initiatives, so more frequent bond issuances. Definitely seeing additional functionality being included in those initiatives. So, example could be coupon payments now being included within the smart contracts. And one really important trend that we've seen, and we think very positive, is we're seeing a lot more collaboration. So, this definitely started with kind of everyone doing their own thing, which in some way was a great way to start. It was much simpler. You didn't have to coordinate with everyone, but clearly not the way probably to get something to scale up. Now what we are seeing in each one of these initiatives is a number of entities at least participating, maybe still a relatively small number, but moving from the one or two that we saw at the beginning, 4, 5, 6, 7 participating in each one. But also, really seeing that spirit of collaborating, trying to work together on common infrastructure, on standards, which I believe most of us in the industry now believe are critical points if we really want this to scale up. Also starting to see, I'd say, maybe a little bit more immature, but some interesting things happening on other types of assets. That could be tokenization of carbon credits, seeing some very interesting initiatives on creating a secondary market for fractional ownership of real estate. So still pretty, startup mode, let's say, but we do believe those might be some of the most interesting use cases going forward. Now, with that said, still a lot of challenges, at least in our opinion, to really get this to scale up. Already mentioned kind of fragmentation, still a challenge. In some jurisdictions, even the regulatory clarity is not fully there. But without a doubt, one of the biggest challenges right now is how do we manage the cash leg? So, kind of tying back to the theme of our conference here, our panel, and, clearly believing that we do need some widely adapted, safe means to manage the cash leg going forward.
Yeah, okay, so it's new types of securities, new types of assets, and they still need to be settled in the the safest way. And I think according to our central bankers, but also I would say to most banks, the safest settlement as the central bank money. So it's still about having access to central bank money to safely settle the new types of assets and transactions. And I think maybe if we can just then go quickly into what is a wholesale CBDC then. And I think Lex, if you start with you, and then please the rest of the panel add on if you disagree or agree, because this is a term that is widely discussed.
Yeah, so wholesale CBDC is everything people don't understand about crypto plus everything they don't understand about monetary policy. That's what it is. And I have a story about that actually. We were in a meeting at the Nationalbank, and when we arrived, there was a protest against CBDC near the Nationalbank, and there was a woman with a banner that would say CBDC, Central Bank Digital Conspiracy. And I came to her and I tried to explain that this definition only applies to wholesale CBDC because it's only wholesale CBDC will be exclusive for the banks and the National Bank and will not be allowed for regular people, right? So that might be, frankly, consider it a conspiracy if you want. But really what the wholesale CBDC is, for the blockchain people, the simplest explanation would be right now we have different communities, like Bitcoin community, Ethereum community, whatever. And these communities, they have their financial ecosystems. And in order to connect with them, you have bridges. So wholesale CBDC is basically every country or an area like EU have their own sort of a blockchain, sometimes without actual blockchain, but your coins basically locked inside that area. So that's the way for the government, to have somehow a monetary policy. And then in order to have a cross-border payment, you would need to have sort of a bridge. There are different names, there are different technologies and tests, but you would have that. And instead of P2P, things would have a name like PVP. And it's not like a PVP shooter, it's a payment versus payment verification where the settlement is done on this side and is done on this side. Bridge verifies that, so you have that transaction. So wholesale CBDC is a CBDC exclusively used for banks that allow them to simplify their transactions. For them, it would be like a software update that would go from Windows 98 to a Skynet, where everything's so great and so fast, so it's scary. So that's
I think it's scary, and I think the rest of the panel, do you agree with with Lex's definition?
Well, I think so. It's very interesting definition. I think from our perspective, and just to make it very simple, today for settlement purposes, especially in organized markets, we tend to settle in central bank money, and in fact, that's regulated in a number of jurisdictions. So as we think about creating digital securities and start thinking about the optimal way to manage settlements, so let's say the interchange of that asset with some type of cash, wholesale central bank digital currency is just a natural, let's say, need or request on our behalf. Again, not to say maybe it's not the only way to address this problem, and probably we can discuss some potential alternatives. But we do believe, as a bank, that it is part of the, an important part of the puzzle going forward.
Great, and I think Lex, you mentioned that this could be on a DLT, it could be without a DLT, and I think Daniela, you have experience in trying to apply these technologies across different use cases across the globe. Could you, from your experience, also maybe touch upon where are we seeing some of these developments, which technologies are being applied when discussing wholesale CBDCs? Because we're seeing initiatives in Europe, in Asia, in South America, Northern America. Could you touch upon where are you seeing some of the developments and in which concrete use cases?
Yeah, and I'll back up a little bit because I think to understand why the central banks and the private sector are looking at CBDCs, whether they're retail or wholesale, is the understanding that in this digital world, we have to update and make financial infrastructure be able to keep up with what the population needs worldwide. And when you're looking at wholesale CBDCs, it's really about bank efficiencies, bank-to-bank efficiencies. It's not a conspiracy. They have to move money around, and if you could bring efficiencies to that market, and if you can also bring transparency to some of that in the market, it really makes a difference. So we're not, I don't think that the central bankers and the private sector are sitting around trying to, create new technology and new work. They actually have to fix, upgrade our financial infrastructure. And this happens, every 100 years or so, right? The banks have to go through this. So when we, as an open source foundation, we are essentially the shepherds of the open source code that companies, whether they're vendors or they're central banks themselves, will use the open source code to do implementations. We've been seeing implementations in both experiments as well as in production for the last 8 years. The Atlantic Council has a tracker, a great tracker if you want to keep track of what's going on around the world. And the Atlantic Council has, I said the last stat was, I think 93% of the central banks around the world are currently looking at central bank digital currency projects, whether in the wholesale or in the retail. And once again, why are they doing that? They're not doing it because it's a fad, right? And they want a t-shirt because it's a fad. They actually need to do it for us to be able to move money around the world as individuals and as corporations and banks as well. So what we see is central banks, for example, we have within our own foundation, we have central banks, the Central Bank of Brazil, the Bank of England, the Banque de France, MAS, the Monetary Authority, and others who are actually bringing engineers to the table to understand the technology and the things that they need to do that is going to change how their infrastructure currently works. And this is important because it's not magic. There's not a book written about it. There's a lot of people writing books about it, but there's not a book written about it. And there's not going to be one DLT to rule them all. There's also not going to be one approach to rule them all. There's going to be some jurisdictional regulations that actually might write into their law that they cannot use blockchain. And that is okay, right? It's not just going to be one view. So for us, what's really important is to have a forum for the technologists and then obviously, from a bank perspective, the economists to understand, because the economists really need to understand the tokenization, the aspects of tokenization, and how it applies, how long-term it applies to it. So we're seeing all around the world, I'll do a call out specifically to regions, the Banque de France here in Europe and with the European Central Bank, and maybe Wayne could talk a little bit about that. We're seeing a lot of great experimentations out of the BIS, certainly, and the Monetary Authority is Singapore with the projects like Project Ubin and Agora. They all have such great names. But all of these is private sector and central banks and the regulators getting together and looking at technology to see how that technology is going to fit their needs, their future needs as well. So I'll give an example in Brazil. In Brazil, I think they're one of the most forward-looking central banks. They have a CBDC project called the DREX. And what Brazil did, which is kind of unique, and I think more and more regions around the world are looking at this, is they didn't approach it like, we're going to build a CBDC to just move money around. They said, we need new financial infrastructure in order to mature, right? In order to support our people, the Brazilian people, worldwide being able to do business around the world. We need to make sure that from a financial inclusion, people have access to central bank digital currencies and to money. So what they're building is on top of what's called the DREX, using blockchain. They use Bezu, which was one of our projects. And it's an EVM, it's an Ethereum virtual machine. They're very interested in what's happening in the public blockchain space. But their interest is really in building new financial infrastructure so they can modernize the way that Brazil not only interacts with money in-house, but across the world. And that's kind of the difference between, I think, a lot of different projects that started like 5-6 years ago, which were great experimentations, and some of them have been proven that they really didn't bring efficiencies to the market, right? And you know what? The way we do it is just fine. We'll use intermediaries. So I do think over the next 5 to 6 years, we're going to see some real use cases of value across the globe. And I would say keep an eye certainly in Brazil, and keep an eye in places like Indonesia, and even in the Middle East as well. There's some interesting projects going on there.
Great, thank you. And I think you mentioned that the use cases and the collaboration between central banks and commercial banks, and especially around the ECB is running experiments and trials. And I know, Wayne, that you've been involved in some of those and also working together. So could you maybe explain a bit about what you've been working on specifically within this field and the different use cases that you've been exploring?
Sure. So, talking about the ECB trials for wholesale central bank digital currencies, we've been quite active on our side. There's 3 different alternatives proposed, and we've been able to test out the 3 different options. So one's more what we would consider a true wholesale central bank digital currency, so let's say a token on the blockchain. And the other 2 are what are called trigger solutions. So basically, a a smart contract which, based upon the asset being ready to settle, triggers a traditional payment, whether through Target 2 or some other payment system. So it's been very interesting, and I say it's been very interesting. It's still continuing. This goes up until the end of November, and we still have 2 or 3 trials planned. Overall, and again, not jumping to conclusions as it's still ongoing, but maybe just some first impressions. I think one of the first things for us is we've seen it very positive as far as getting people engaged. There's been a ton of interest from our clients, from our counterparts in the market. We really think it's kind of created a little bit more excitement and sparked a little bit additional interest out there in the market. So that's been very positive. So already, a real benefit, we believe. I think the second part, and important for what we're discussing here, is, everything indicates from what we've seen that there are viable technical solutions to manage the cash leg, to do cross-chain settlement. Let's say, we haven't seen anything that makes us think that this is not a viable solution going forward. So that's very positive. Then what I would say right now, we're really, hoping that there is a continuation. So this program ends at the end of November, and a little bit still to be seen what's the next steps. So again, very much hoping that there is a continuation and that we'll be able to leverage some of these solutions to start scaling this up.
Great. And I think maybe you made a great bridge into the next topic, and that is a wholesale CBDC the right solution to a potential need from the sector? And I think this is an open discussion around, are there other possible solutions, or is the only viable solution a wholesale CBDC on a DLT, or do we see other ways of actually addressing a potential need from the market? And I think, Lex, if we can start from you, and then I guess we just have an open discussion about how you view this area.
Look, from a national bank view, it seems like that's actually the best solution, because if we say there's another solution, let's say stable coins, but stable coins are too cross-border already. The USDT, USDC, when you cross the border, you don't actually carry your stable coins. They just exist in all the countries simultaneously. So from the national bank perspective, the national bank want to control, let's say, dollarization of the economy, want to control rate of the national currency, want to control inflation, deflation, all these sort of processes, right? Stable coins are taking out the ability to do that. So CBDC basically locking up to your location, control of the money supply and things like that, basically allow you to have better control of the economy, and that would mean a more stable economy. I definitely think that the national bank doesn't want to happen something like Luna or FTX, right, with something, right? So the goal of the national bank is the stability of the economy. And the commercial banks actually interested in that as well. I mean, they're interested in slightly higher rates. And CBDC maybe, especially if there's some automation, so as DeFi will come forward in retail side, they will allow the banks also to attract customers again with slightly higher rates on that, right? And even from the business point of view, or banking, like a commercial banking point of view, stable coins are still a viable competitor. And if you think about it, this really fascinates me. Like, people are scary about stable coins, for example, now in Europe, and just generally scary. Some of these stable coins being pretty big, they don't have good proof of reserves. And people still use them with all these risks. I know friends that if I call them today and I say, hey, Tether went zero, and they're like, oh, shit. Sorry for that word. But that would be like one of the options for them. Like, it could happen, where the national bank cannot think in that sort of categories. So Stablecoins are nice probably for foreign trade, and maybe the CBDC will still require some intermediary in the form of this sort of bridge, right, between different countries, different systems, different maybe parts of the globe. So maybe stablecoins will take a little bit more share in a foreign trade, but from the national stability point of view and control of the economy point of view, that's just really the best as we can get. It's a software update to increase speed and to increase just trust in the system, remove a lot of intermediaries, because routing is the problem. What we people get from that is we get faster transactions, faster settlement, and what commercial banks get from that, they don't experience counterparty default risks, for example, and they have high velocity of transactions.
Yeah, and I think, maybe moving away from that into other solutions to getting access to central bank money. So one is, as we've been discussing, is actually having a tokenized central bank version of reserves. But there's also other ways of connecting into the central bank systems. That could be other interoperability solutions. And do you see those as alternative solutions to the same problem?
So yeah, I think definitely concur with the opinion that the perfect solution in some way is a central bank digital currency, so issued by the central bank. But as you said, maybe there's alternatives, and maybe if we wait till we get to the perfect world, also we'll be waiting a long time. No, so we do think it's interesting to at least consider alternatives. One alternative that we're definitely involved in is finality, which is very much as you said. It's a way to work with central bank money without the need for the central bank to actually issue a currency. It's leveraging a type of account structure that already exists in the central bank in the UK for payment systems. So could give us an option to have a tokenized representation of central bank money much sooner than probably we'll really see, some of the central banks, at least here in Europe, issue something. So we do believe something like that could be a viable alternative, at least, let's say, to get the ball rolling.
Daniela, do you have?
Yeah, I mean, I agree with that. And you see things going on and discussions around things like unified ledger and global layer one, this concept of the fin internet that BIS has put forward. So I think, everyone is kind of working towards this. How do we build these new rails and what are the approaches? And I just want to, go back to the technology part, right? So the technology is there, it scales, it works. Wayne even said during his pilots. And the thing is, keeping in mind is what you need, what you architect the technology to deliver to the market. So, we're very, proud of our projects within the Linux Foundation, whether it's Bezu or Hyperledger Fabric or Iroha, and other Firefly, for example. And these are all projects that are open source. And it's really important to just be able to, and I encourage everyone to take a look at it, to, be able to participate and be part of what essentially is building the financial infrastructure of our future.
Great. I think maybe just to summarize quickly, the time is running and we are out of time. So the sector still needs central bank money. Daniela, you mentioned every 100 years we're innovating, we need to change the systems. We still need access to central bank money. That access can happen in different ways. It can be a unified ledger, it can be interoperability, it can be many other ways. Stablecoins might not be the right solution in this case, but otherwise technology could solve some of the issues, but it depends on the actual problem. I think we're finishing now. Please help me thank the great panelists for these great insights.